The Jobs Act, Regulation D, Rule 506B versus Rule 506C. Learn how to take your company to the next level, raising capital without a bank loan. Our mission statement, MKG Enterprises Corp is a boutique financial service company that provides outsourced accounting, advisory service, and non-traditional investments contained in our circular offering under Rule 506C of Regulation D. Our firm provides access to capital markets by utilizing the Jobs Act, promoting Regulation D investments in companies in the following industries in the Central Valley: construction, affordable housing development, opportunity zones, communications, consumers, energy, financials, healthcare, industrial, media entertainment, retail, and the technology sector. Our ambition is to be the Central Valley SaaS leader in private capital markets using crowdfunding technology platform software. Our robust software includes tools and processes for each stakeholder group to market and distribute investment offerings, facilitate incoming payments and outgoing payments, manage tax and performance reports, collect investor signatures, adhere to regulatory compliance, document audit trails, among other powerful functionality. Investors. The investment fund investor model will introduce pre-IPO companies, debt and equity offerings, as well as real estate investment properties in the Fresno market. In the Central Valley, there is an economic disparity among accredited and non-accredited investors having access to invest in private companies. We intend to be the leading Central Valley private investment fund model under the Investment Company Act of 1940, recruiting RIAs, registered investment advisors, to be a social asset in the community, putting clients' needs first and contributing to others who are less affluent and have disposable income less than $200,000, which is the African American community. Introduction to Jumpstart Our Business Startup Act. Small businesses are the backbone of our economy and the cornerstone of our communities. Over $1.4 trillion was raised through the Regulation D exemption in 2014, and over 40,000 Regulation D offerings have been executed since 2009. Regulation D provides the capability to raise capital in compliance with state and federal regulations and provides the fundamentals necessary to accomplish soliciting and accepting investments from investors. The Jobs and Investor Confidence Act of 2018, Jobs 3.0, as it is widely referred to, significantly expands opportunities to raise capital. Fresno County has 47 opportunity zones. 37 of these fall roughly within the city of Fresno's sphere of influence. All 47 zones account for 756,979 acres, or about 22% of all land within the county borders. The city of Fresno zones cover around 36% of the city's controlled acreage. The metropolitan Fresno areas are home to over 1,010,409 residents and 99,004 businesses, and estimated at about 3,002 nonprofit organizations. Here's a brief overview of our Fresno capital markets overview. SMBs, small to mid-sized businesses, can list their company or opportunity zones on Fresno Private Capital Markets Software as a Service crowdfunding portal. SMB membership fees is waived for 3 months due to the COVID-19 pandemic and can raise up to $1 million or up to a maximum of $5 million in a 12-month period. We provide ongoing support and a self-directed IRA account to manage your crowdfunding offerings. There is a portal fee of 6% of the total raise. Our platform is not based on a FICO score. No personal guarantees required. Startups can apply. You can attract affinity. 35 non-accredited investors can participate in 506B offerings. The cons, 506B offerings are unable to advertise. You cannot go live on Facebook. You cannot offer this on the internet, post it on Instagram or Twitter. However, the 506C offerings is what we promote. Can advertise on the internet, radio, television, social media. However, you must verify investors are accredited. 506C suitability requirements. To be an accredited investor, a person must have an annual income exceeding $200,000 or $300,000 for joint income for the last 2 years, with expectations of earning the same or higher income in the current year. In the African American community, and also in the Latino and Hispanic community, with the single breadwinner or income earner, this is highly unlikely that we would have a lot of accredited investors in our community, which means our access to capital is very small, and businesses are struggling to be sustainable and survive. President Obama's Dodd-Frank law. Well, going back to what I was saying about the accredited investors, you got to have a net worth of at least 1 million, not including the value of your primary residence. So if you have $1 million home, that cannot be included in your personal net worth. These requirements have been in place since 1982. The only change came in 2010 when President Obama signed the Dodd-Frank into law, which makes the requirement more stringent by removing the value of an individual's primary residence from net worth. The result, 90% of US households are effectively shut out of private stock ownership by law, based on President Obama's Dodd-Frank law. Accredited investors requirements. Why does the accredited investor requirements exist? The SEC's accredited investor requirement was created to delineate sophisticated investors from novice ones and protect novice investors by restricting their ability to buy unregistered securities. The intention was to ensure that people who do not invest in private assets can handle the risk of losing the investments. But capital markets are continually evolving. Their accredited investor rule hasn't changed while market conditions have. Private markets have been growing, and they're here to stay. Only 10% of US households are considered accredited investors and are able to participate in private stock ownership by law. Limitations on access to capital from banks, lenders, the SBA Paycheck Protection Program, or the P3 loan, and the EIDL loan, Economic Impact Disaster Loan. The pros: small businesses can qualify for the SBA Paycheck Protection Program. It's easier when you're prepared. Knowing whether you meet its criteria before you apply will save you time and frustration. We also have a link to the PPP fact sheets. Your personal credit score ranges from 300 to 850. The higher the better, and evaluate your ability to repay your personal debts, such as credit cards, car loans, and a mortgage. You can get a free credit score on NAV. The cons: limit to loan funding and access to capital based on payroll. Funding availability is based on Congress appropriation of funding. Your FICO score impact. The FICO score commonly used in lending decisions is based on 5 factors: your payment history, which is 35% of your score, the amounts owed on credit cards and other debts, 30%, how long you've had credit, 15%, types of credit in use, 10%, and recent credit inquiries, 10%. Small business lenders require a personal credit score for loan applications because they want to see how you manage debt. Usually that credit score ranges from 600 to 650. Paying your bills on time is crucial to building your score. But even if you pay your bills like clockwork, credit report errors could be damaging your score. Mitigating factors for SMB loan denials. 1 in 4 consumers identified damaging credit report errors, according to a 2012 study by the Federal Trade Commission. However, 4 out of 5 consumers who filed a dispute got their credit reports modified. The study found a follow-up study by the FTC found that 20% of these consumers saw a jump in their credit score after resolving errors. You can get a copy of your credit report for free once a year at annualcreditreport.com and dispute any inaccuracies you find through each of the credit bureau's website, Experian, Equifax, and TransUnion. Why many small, mid-sized businesses, SMBs' doors will close due to COVID-19 pandemic and lack of access to capital. More than likely, many small, mid-sized businesses, SMBs, will need an excellent business credit score, as well as a good personal credit to qualify for an SBA loan or traditional loan from a bank. This will depend on the individual lender and business factor, such as your revenue, cash flow, and time in business. In general, online lenders look at personal credit scores, but can be a bit more lenient when it comes to credit score requirements, as they place more emphasis on your business cash flow and track record. The significant need to raise capital to restart the economy, especially here in Fresno and in the Central Valley. Small businesses are an anchor of the U.S. economy. 48% of all U.S. employees work for small businesses, down from 52% in the early 2000s. 18% of all U.S. employees work for a business with fewer than 20 employees. Small businesses account for over half of the net job creations in 2014. Small businesses are the lifeblood of the U.S. economy. They create 2/3 of net new jobs and drive U.S. innovation and competitiveness. I cannot emphasize this enough on why we need to start raising capital to restart our Fresno economy. Background. A majority of entrepreneurs and emerging businesses raise capital using the exempt offering framework under the Securities Act, from raising seed capital for new businesses to funding growth on the path to initial public offering. The Securities and Exchange Commission announced on March 4th, just recently this year, 2020, that it has voted to propose a set of amendments that will harmonize, simplify, and improve the exempt offering framework to promote capital formation and expand investments opportunities while preserving and enhancing important investor protection. Offering of securities must be either registered with the Commission or qualify for an exemption from the Commission's registration requirements. A majority of entrepreneurs and emerging businesses raise capital using the exempt offering framework. This capital formation actively ranges from seed capital for new businesses to growth capital for companies on the path to an initial public offering. The proposals are most recent steps in the Commission's ongoing efforts to assess the capital raising framework as a whole and improve it for the benefit of investors, entrepreneurs, and more seasoned issuers. The proposed amendment to the Securities Act of 1933. The current framework has 10 exemptions or safe harbors, each with disparate requirements. The proposed rules are focused on reducing friction points in the offering framework to help market participants navigate the exempt offering process. For example, under proposed rules, an issuer in a qualified opportunity zone would have a clear framework for how to conduct exempt offerings targeted to various investors, including community members, while still complying with important investor protections. Emerging companies, from early stage startups seeking seed capital to companies that are on a path to becoming a public reporting company, use the exempt offering rules to access critical capital needed to create jobs and scale their businesses, said Chairman Jay Clayton. The complexity of the current framework is confusing for many involved in the process, particularly for those smaller companies whose limited resources spent on navigating our overly complex rules are diverted from direct investments in the company's growth. These proposals are intended to create a more rational framework that better allow entrepreneurs to access capital while preserving and enhancing important investor protections. How it works. If you're a small business in Fresno and have a project in need of funding, to set up an account is absolutely free. Let me repeat this again. To set up an account is absolutely free. We do not charge to review your account. However, there is a small 6% site fee that will automatically be deducted from your crowdfund earnings. Additionally, credit card processing fees will range from 3% to 5%. You can raise up to $5 million in any 12-month period to an unlimited number of accredited investors and up to 35 unaccredited investors. Our crowdfunding portal is locally owned and operated in the city of Fresno. We also provide private placement memorandum templates, inline XBRL prepared filing services that is filed to the SEC, are all inclusive for a fixed rate of $125 per month, which is waived for the first 3 months with a 12-month commitment. This fee is waived if the initial raise is greater than $25,000. So what we're saying is if you create a crowdfunding project and you raise $25,000 or greater, there is no monthly fee, completely waived. So why would anyone go to a GoFundMe and raise that kind of money and only be limited? Regulation D. For those of you that want to figure it out, do it yourself, you can go online to upcouncil.com/regulation-D, or you can also go to the electronic code of federal regulations. Outsourced CFO accounting services. Our crowdfunding CFO startup plan is a great option for a startup raising capital for the first time. Our primary market is the African American small business community, or a smaller business who just needs their bookkeeping managed for them. The complete package is for the mature business who is taking things to the next level and ready to file for a Regulation D offering, 505, 504, 506, pre-IPO, or Reg A Plus offering. You don't want to have to worry about this accounting stuff, and you just want it done so you can have the information you need at all times to run your business properly. Here, we will work with you to streamline systems and develop your ecosystem with the right online apps and infrastructure. We are truly your back office partner. The CFO plan adds our CFO service to our complete package service. In short, we'll keep your books and run your cash flow projections for you. Then we'll meet you remotely to review and plan. We'll lay out the yardstick so you can reach your milestone of hopefully raising that $5 million capital for your business. Full charge bookkeeping service. Bookkeeping fee is $4.95 per transaction, with a minimum monthly service charge of $25. The accounting software monthly fee, whether it be QuickBooks, $30, or $0, is $30. Intelligent business payment platform. Base price. Per month is $49. Per user is $15. Pay bills or get paid both. Cost per transactions. We mail your checks or invoices for $1.49 each. Send or receive ACH payments for 49 cents each. Receive credit card payments and merchant fees. Level 3 rates available. You can send international FX wire payments for $9.99 each. Send international USD wire payments for $9.99 each. Void a check is $25 each. Void a return check is $3. We do your payable data entry, which is optional, for $1.99 each. Disclosures. MKG Enterprises Corp -client.com is a website owned and operated by MKG Enterprises Corp, MEC. MKG Enterprises Corp is paid fees by the companies that make investments and reservation offerings on this website or on this webinar. Be aware that payments of these fees may put MKG Enterprises Corp in a conflict of interest with the investor. See the MEC fee schedule here. By accessing this website or any page thereof, you agree to be bound by the terms of use and privacy policy as amended from time to time and in effect at most recent times you access this website or any page thereof. Nothing on this website shall constitute an offer to sell or solicit or an offer to subscribe for or buy any securities to any person in any jurisdiction to whom or in which such offer or solicitation is unlawful. Consequently, any featured front page or prominent placement of a listed company on this site is not deemed to be a recommendation and may be based on various algorithms or selections that drive traffic to such listed companies. MEC does not affect security transactions, give investment advice, or recommend any security that it is not registered as a broker-dealer, Reg CF funding portal, or investment advisor with the U.S. Securities and Exchange Commission, or the Security Regulatory Commission, agency or body of any state of the United States, or any non-U.S. jurisdiction. As such, MKG Enterprises Corp is not acting in a fiduciary capacity with respect to any user of the MKG Enterprises Corp services. And MKG Enterprises Corp disclaims any broker-client or advisor-client relationship with respect to any party using those services. Listed companies are actively seeking to raise early-stage capital pursuant to Rule 506B or 506C of Regulation D. Regulation D under the U.S. Securities Act of 1933, as amended, the Securities Act or pursuant to Regulation A, sometimes referred to as Regulation A+. Under the Securities Act, Regulation A, listed company offerings are being made by, and all the information included on this website related to a listed company and its securities has been provided by and is the responsibility of such listed company. A listed company's offerings on this website, if made pursuant to Rule 506B or Rule 506C or of Regulation D, generally are available only to accredited investors as defined in Regulation D. Accredited investors are able to identify listed companies in which they may have an interest after a certification process for Rule 506B offerings. While Rule 506C offerings are available for the general public to view, offerings made pursuant to Regulation A are also generally available for the general public to view. Investing in securities, particularly in securities issued by startup companies, involves substantial risk, and investors should be able to bear the loss of their entire investment. We encourage you to seek legal advice. This webinar is presented by MKG Enterprises Corp. Our address is 4021 North Fresno Street, Suite 107 in Fresno, California, 93726. Our office phone number is 559-412-7248, or you can reach us toll free at 866-675-3933. Our website for raising capital is MKG Enterprises Corp -client.com. Thank you for attending this website, and we look forward to answering any of your questions.